In this video, we are going to see how to invest like a pro. So I am going to provide you top 10 tips for investing like a pro. Let's get started. Investing like a pro requires a thorough understanding of the market and various risks involved. To invest like a pro, you need to have a disciplined investment approach that focus on long-term goals and diversified portfolio. Firstly, it's important to understand that investing always carries some degree of risk. Therefore, it is essential to understand the different types of risk such as market risk, interest rate risk, credit risk and liquidity risk, and to diversify your portfolio accordingly. This means investing in a variety of assets such as stocks, bonds, real estate and commodities, as well as diversifying across different sectors and geographic regions. Secondly, it's crucial to do your research and analysis before investing in any assets. This includes analyzing the financial performance of the companies, understanding macroeconomic trends and keeping up to date with market news and developments. It's also important to invest in assets that align with your investment objectives and risk tolerance. Thirdly, it is essential to have a disciplined approach in investing and to avoid making impulsive investment decisions based on short-term market fluctuations. This means setting a clear investment goals and developing a well thought out investment plan that considers your risk tolerance and investment time horizon. Finally, it is important to seek advice from the professionals who have experience and expertise in the investment field. This can include financial advisors, investment managers and analysts who can provide valuable insights and help you make informed investment decisions. Here is the top 10 tips for investing like a pro. Tip number 1 for invest like a pro. First is fixed deposit or recurrent deposit and or both. So first you have to see the fixed deposit options in the government as well as private bank who is giving the high rate of interest. So if some public bank or private sector bank giving good interest, then try the fixed deposit first. Then if you have more money, then try the recurrent deposit also for every month like this based on certain period or both. Moreover, you can able to convert the fixed deposit interest into recurrent deposit simultaneously. So by the time you can have a fixed deposit as well as you can have a recurrent deposit investment based on the interest gained from the fixed deposit in every month or quarterly like this. Number 2, buy a physical gold coins or gold biscuits. So it's better to buy a physical gold coin or biscuits to avoid the making charges than other charges. Then moreover, it is very easy to pledge whenever you need urgent money in the bank as well as private bond brokers. So after the fixed deposit, my opinion is to buy a physical gold. Tip number 3 is to buy real estate land or agriculture or farmland. It is better to invest in a real estate for long-term investment. If you have enough money, if you have thought of buying a land for long-term investment, so you might be have money from the fixed deposit or gold or whatever you have. If there is a good opportunity to buy a real estate land, if some land is coming with a low cost, there is a possibilities that better to buy a real estate land or farmland or agriculture land. Fourth tip is to buy an individual house. So it's better to buy an individual house rather than buying a plot or apartments. So individual house having the land value. So it's better to go with the individual house. If you have a money, after considering the 1, 2, 3 tips, this is the 4th tip. After investing in the FD, then gold, then real estate, then house, if you have more money, then invest in the bond. So it's better to go with government bond, followed by very good corporate bonds. So there are bonds provided by RBI or the government. So it's better to invest in the government bonds. Still you have option to invest, then go with some corporate bond which is having a strong base in India. After considering the 5 tips discussed above, if you have more money, then go with fundamentally strong government stocks. That means government owned stocks such as Coal India, National Thermal Power Corporation, then Oil India Limited, etc. So try to invest in the fundamentally strong dividend giving stocks from the government sector. So try to find out fundamentally strong dividend giving stocks, then invest in the stocks. Tip number 7, or invest like a pro. Invest in fundamentally strong stocks in Nifty 50 such as ITC, that means Indian Tobacco Corporation, and Infosys, which is a IT stock. So try to find out fundamentally strong stock which is giving the good dividend in the Nifty 50, then invest in that. Followed by tip number 8, invest in commodities such as gold or US dollars, etc. So try to invest in the commodity market, especially gold and US dollar. Number 9, invest in potential business in your locality. So after considering all the above 8 tips, if you have money still, then invest in a potential business which is having good opportunity in your locality. You can able to observe daily, then such kind of business you can see and find, invest in that. Finally, tip number 10, do not keep money in the simple savings account. Go and ask your banker to convert the savings account into Pro or Max account for more interest paid by the bank. So simply keeping the savings account, so you can get only 4 or 2% of the interest. So if you keep it the same money in the Pro or Max account, you may get more interest as compared to the savings account. Only thing is you need to maintain the money like 10,000 or 20,000 or 50,000 rupees. So it's better to convert the savings account into Pro or Max account for getting more interest. So thanks for watching the video. If you like the video, please do subscribe our channel for more kind of videos. Thank you.